Welcome back to Learn SKN, and today we're going to start our journey looking at the May-June 2025 CSEC POB paper 2. So if you want to know when I drop videos for this particular paper, you know what to do. Like, subscribe, hit the bell so you know when it happens. But without further ado, let's jump into this latest paper 2025. Question number 1, a very familiar topic. Barter was the main means of payment utilized in early economies. Define the term barter. Wow, definitions are now 1 mark. Whoa, that's interesting. Normally definition would have been 2 marks, but I see a 1 marker. So, barter can be defined as the exchange of goods or services for the exchange of other goods or services, and the key part here, without the use of money. You can see it right here and in your lovely textbook. Barter, right? So barter, it involves trading one good or service for another one of equal value without the use of money. So that is barter right there as a definition. Roman numeral 2. Outline 1, disadvantage of barter. And so you have many. The disadvantages are many, right? I think the main ones are, the 4 main ones are, what is the outline? So if they are telling us to outline, that means that it's not just a listing, it's outline. That's why they gave us this mark, right? These lines. So you have to give us a nice little 1 or 2 sentences for the outline. So let's go. You can choose any one you want. So we have right here, the main problem was double coincidence of wants. What that means is that if you want to engage in barter, you had to find someone who has what you want, and they have what, and you have what they want, in order to even begin to consider trading. So here it is. So double coincidence of want. You had to find someone that has what you want, and you want what they have, so that you guys can trade. Double coincidence of want. Establishing an exchange rate. What that means is that sometimes it was difficult for both parties to say how the exchange rate should go, right? And so maybe they couldn't agree. So they might have been hard to agree upon how to exchange this good for that good, or that good for that service, or that service for that service. So here what they say here, even if an individual could find someone who is willing to exchange in barter, they still have to agree on the exchange rate. And sometimes they could not agree on how to exchange the goods. Then we have indivisibility of goods. Goods were not easily divided during the barter time. So for example, you might want to say, okay, half a cow for 10 pounds of potatoes. What am I going to do with half a cow? If you cut my cow in half, it's dead. And so goods were not easily divided to meet that exchange rate. And then we have inability to store wealth, which means that, especially back in the day, these goods were perishable. And so you couldn't store them for long periods of time to build your wealth like we can with money today. And so you had a problem in storing some of these things for a long period of time. You know, you had to store your fruits, your vegetables, your meats, etc., because they're going to spoil. And so they would lose the value over time. And so it was very difficult to really store these particular goods. Alright, so anyone? Outline it and you get your 2 marks. Alright, state 2 characteristics of money. Remember, do not mix up characteristics with function. Right? Do not mix up characteristics with function. Characteristics are: state, it must be portable, it must be divisible, it must be acceptable, it must be durable, it must be scarce, and it must be homogeneous or fungible. Those are the characteristics of money. The only access to state. So you don't have to explain or outline. This is state. So here they are. It must be portable, divisible, acceptable, durable, scarce, and homogeneous, meaning all units are the same. So every $5, same. Scarce mean you can't easily come by it. Money today is hard to come by in terms of it cannot be forged easily. You can't just print it. Durable, it must last. It don't wear out quickly. A lot of money today are made of plastic, and so you can wash them and they still come back good. Acceptable, people must say, okay, yeah, I agree, this is money. I'm going to accept this as payment. must be divisible. It can be divided into smaller pieces. For example, a dollar can be divided into 4 quarts, or 25 cents, or 10 cents, etc., etc. Must be portable, can be too heavy, can easily be transported. So those are the characteristics of money. So moving on to the question. Okay, we're looking at the check here. Identify the drawer of the check. Identify the drawee of the check. List 3 instruments of payments other than checks used in modern economies. So let's look at our check right here. I know a lot of people don't really use checks anymore, but you still must understand what they are, because sometimes businesses still use those things. So if you're looking at this check, we can say that the drawer is the person who is writing the check. So in this case, that would be, what's that? Kimani Clark. Kimani Clark is the drawer, and the drawee of the check would be Sunshine Commercial Bank. So the bank would be the drawee of the check. And if they ask for the payee, it would have been ABC Traders. So Kimani is paying $6,000 to ABC Traders, and they are using Sunshine Commercial Bank. So again, the drawer would be Kimani Clark, and the drawee would be Sunshine Commercial Bank. Then it's a list 3 instruments of payment other than checks used by modern economies. And so we can go and look at a whole lot of them. So we have credit card, debit card, bill of exchange, electronic transfer, internet banking, telebanking, money order, bank draft, telegraphic money transfer, mobile money, mobile wallets. So all those are instruments of payments other than just checks, right? Those are other instruments of payments. Straightforward enough. This is the list. All right, good. Moving right along. C, differentiate between each of the following pairs of terms: private sector, public sector, private limited companies, public limited companies. And so the private sector is that part of the economy that is controlled by private individuals and private companies. The public sector is that part of the economy that is controlled by the government, right? That's private sector versus public sector. The private sector is controlled by private individual or private organizations, private businesses, whereas the public sector is operated and controlled by is that part of the economy that is controlled and operated by the government. Public sector, that's the government, schools, the police, whatever it might be. All right, private limited companies and public limited companies. So one of the main distinctions here: the private limited company is a company that is not allowed to trade on the public stock exchange. But if you jump to our textbook, let's look at our textbook. It has a glossary. So we have the private limited company, a business organization owned by its shareholders that is able to sell shares privately and with consent of all other shareholders. So they're not allowed to sell shares on the public stock exchange, right? But the public limited company now, again, is owned by shareholders, but they are able to sell shares publicly through the stock exchange. That's one of the key differences between these two entities. How they can raise their capital. Private, they can only do it through, persons who are privately holding the company, shareholders who agree to sell to other private individuals. Whereas for the public company, it's the public sector. It's public stock exchange. They can utilize the public stock exchange to sell their shares. So that's one of the key differences. All right, so that's that. Then we have D. Explain one advantage and one disadvantage to society in a mixed economy when compared to society in a free enterprise or the capitalist system. So one advantage and one disadvantage to each of those. So let us look at them. So what we must understand is that the mixed economy includes both the government, so the public and the private sector. So the mixed economy has the private sector and the public sector. The capitalist mostly is made up of the private sector. So in a true capitalist system, the government has little to no say in what happens in that economically. But in the mix, the government has a say. And so one advantage is right there, where because it's a mixture of the two, the government has a hand in how activities are done in the mixed economy. And so therefore the government can intervene to prevent businesses from taking advantage of customers. So the government puts rules and regulations to protect customers against the enterprise, the free enterprise, the people, the companies. In the free market, no. Supply and demand determines everything, and so the government doesn't really intervene. And so there might be a case where there is not a production of certain things because it's not profitable to the private sector, and so they don't produce it at all, because in the capitalist system it's all about dollars and cents. So the advantage is that the government is there to put laws and rules in place to protect consumers from businesses, as we can see it here. Involving both state and private individuals or businesses in the allocation of resources allow them to be used efficiently. Government actively involved in putting regulation in place so that people don't get taken advantage of. So that's one advantage. And next, the disadvantage though is that sometimes government regulations get in the way of the private sector allocating resources to the best of their abilities, or just slows down the ability to actually produce and things like that. So regulations can be a problem, they can be a bottleneck in that system, right? Also, a next downside is that government organizations, they are one of the most inefficient organizations out there. The government is one of the most inefficient entities for allocating resources, and so that can be a big disadvantage. Once the government is in charge, you're going to be very, very inefficient. So those are some advantages and disadvantages of the mixed system versus the capitalist system. And you can go to your textbook to see how they outline some of these right here. So that's it for this particular question, the May-June 2025. Like I said before, like, subscribe, hit the bell so you know when we drop the rest to this video. Thanks for watching. Thanks for listening.